The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
Only a tough day for investors, and joining us now to discuss the crypto markets is Martin Leinweber. He is a digital asset product strategist at MV Index Solutions. Good morning, or good afternoon to you, Martin.
Good morning. Thanks for having me.
Thank you for being on. As we talked about earlier on the show, we're seeing across the board all sorts of, all the cryptocurrencies basically being crushed today. ETH down about 20%, Bitcoin down about 11%. As our previous guest, Kevin So, discussed, he said that he believes that some of it was selling on behalf of funds that had been heavily invested in Luna. Is that necessarily the case, or were there other reasons besides the Terra Luna fiasco that led people to sell their crypto? Is there a loss, or is there a loss of confidence in the markets?
Well, that's a good question, and I think it's still macro related. And the big question is, when does crypto decouple from traditional markets, especially equity? And if I just look at what happened in the digital asset space over the last days, we see a lot of signs of capitulation. So we had massive volume spike in Bitcoin. We have forced selling of alts. You mentioned it, the implosion of an algorithmic stablecoin, and even witnessing participants selling today their tether to market makers in extreme fear. But unfortunately, we don't operate in a vacuum, but have to watch out what the Fed is doing, and in a consequence, the US dollar and interest rates. And to put things into perspective, we've lost $35 trillion in global market cap value since the beginning of the year, and that's 14% of all global wealth. And this includes the $1 trillion losses in crypto, but not non-financial assets such as housing. And for reference, in 2008, it was a 19% decline. So for me, it's all about the inflation. And with President Biden saying that inflation remains unacceptably high, and he's confident that the Fed will do its job on inflation, it's all on Jay Powell's shoulders. So the Fed put his gun. And the question is crypto bottoming first, followed by equities? Or will traditional risk assets drag crypto lower as the correlation stays high? And when the economy enters a recession, markets overreact and drop well below the trend. So we have to watch the Nasdaq further carefully. And if investors price Bitcoin, for example, this way, and they do it at the moment, Bitcoin could fall well below fundamentals and long-term trends. So watch the correlations, watch what commodities are doing. And I think we need a deflationary moment again before we can have a sustainable turnaround.
So it sounds like you have a very fairly bearish outlook, a lot more bloodletting to come. So do you have a bottom, let's say, in Bitcoin and ETH?
But I think the bottom, as I said, if you just look at crypto, you can make the argument that we are near the bottom at the moment. But it's really hard to say. I would further focus on what are doing the blue chips versus the altcoins, for example. And if I just look over the last 7 days, we see blue chips, Bitcoin and Ethereum outperforming versus, let's say, smart contracts, which were losing 31%, metaverse gaming, even over 50%. So I would watch the Bitcoin dominance. We are at the moment at around 45%, but I can imagine that a figure between 50 and 60% is maybe a clearing level for alts. And in this environment, we just see consolidation in token activity. So watch out for catching a falling knife. It's definitely time to be conservative, I would say.
Is there anything that you're noticing in the alt market that kind of stands out from the trend? Because, as you've noted, they're sort of moving together for the most part. But are there any alts that are performing either better or worse than expected, or who are defying this larger trend, or are they really just all the same?
That's an interesting question. So if you would have asked me these questions 2-3 weeks ago, I would have confidently said that smart contracts are still holding up quite well, all the base layer 1 chains. But this is completely gone. So we have the old relationship of having Bitcoin as the less risky assets in the crypto space, followed by Ethereum, and all other altcoins are in another league. So I would still think that as long as we don't have priced in the recession fully in traditional markets, it will be really difficult for altcoins to shine. So investors will still focus on the Bitcoin and Ethereum, on the blue chips. And I would say even, and what is interesting, and this relates to the UST question, or which you had discussed in the session before, there's even a price differentiation between other stablecoins. So this morning we have seen that Tether, for example, was below $1, trading at 95 cents. So people sold Tether and even went in USDC or DAI in order to be in the better, so to say, better stablecoin. And this is something which is quite new and which shows you how extreme and how panicking the whole crypto market is at the moment.
Speaking of which, you know, the EU Commission is apparently favoring a ban on large-scale stablecoins, according to a document. We have a CoinDesk report on it. And originally it was meant to target Facebook's now abandoned Libra project, but now it could filter off to other cryptocurrencies. And I wonder your thoughts on, do you see that happening?
I think the action with Terra Luna was definitely a trigger for more regulation to come. Well, here's the thing. No government wants unregulated stablecoins. So all those stablecoins are borrowing the unit of account from central banks, mainly the Fed, as we have a dollarization of the stablecoin market. So we see more regulation in that area going forward. And if you're honest, it could be seen as a bank product. Yeah, so you get something back at par, you get an interest rate, it's in US dollar, so it looks like a bank product, it smells like that. So the key is, for example, if you own Bitcoin or Ethereum, it's not somebody else's liability. But building a derivative on the US dollar is not the same, or maybe on the euro. Yeah. And at the end of the day, it will be a net win for the industry. Why? Because even if we have CDBCs, which we don't like, or fully regulated stablecoins, I think they will be ultimately settling on crypto rails. And so we have to end this question with a positive note, I guess. And so I think net, it should be a win. But the incumbents will everything they have to do to slow this development down, I guess.